Hey, hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at technical charts and try to understand what happened in the market and then plan for a better trade for the upcoming week that's starting from tomorrow, July 15, 2024. So we look at the charts first. This is a weekly view. We are seeing multiple breakouts, cup and handles and flags. So on both indices, very clearly seen there. Then we'll be in the weekly charts itself, where we are seeing that it's moving inside a trend line channel, both indices, and it's in the top. Nifty is at the top of the trend line channel. This is a daily view. We can see that how the rally has been happening since the last 1 year, where it had its one small pullbacks and then to steadily moving up. In between we had the election volatility that happened, but it's moving on a expanding wedge and it's the top. So that's what the daily charts are showing, the Nifty and the Banknifty. Candlesticks, if you see, Nifty on the left side is showing a green candle, not exactly a hammer, but has a longer wick size, so almost like a hammer, you can say, but the candle has made an all-time high. It's the 8th consecutive week of making new highs. That's what Nifty is showing. Banknifty, on the other hand, is showing almost a red hammer and did not make a new high after 3 weeks of making new highs, and has retraced a bit. Daily candles of Nifty is showing again a solid bullish candle after getting a new all-time high on Friday, while Banknifty showing the weakness with a gravestone doji, which is indecisive. And if you look at all the other days, it has formed in a V-shaped move actually, and the full recovery did not sustain, it fall back. But in the case of Nifty, it had inverted V's and V both. It was very volatile, both of them. If you see, if the last 5 days in this candlestick patterns, how it's performed. All demands are showing an expansion, continues intact on the Nifty, while the contraction is beginning on the Banknifty clearly, but the bias is bullish on both. So the bullish bias, we have some contraction on the Banknifty, while expansion continues on the Nifty. So all in the sense. We'll come back to this support and resistances before we just wrap it up. So Nifty is continuing hitting new highs for the 8th week, and it went very volatile. But it managed to sustain not just above the 24k, but above the 24,500, and it formed a bullish candle also with a longer big size, and it closed positive 0.72, 174 points, and it maintains the weekly exponential moving average, and it's a 46% of rally from the breakouts. Nifty, on the other hand, went volatile, retraced last week and then formed a bearish candle, almost like a hammer, and it's closed negative 0.733, 85 points down, and that also has so far seen a 38% of rally from the multiple breakouts that we had seen earlier. Daily, it's a V-shape and an inverted V-shape both on Nifty, as we had seen, and closed positive 0.77 on Friday, 186 big breakout once again on Friday on Nifty, and formed a green candle above the 20 exponential moving average, with Banknifty closed flat, positive just 8 points gain on Friday, and formed a doji candle, which is indecisive nature. We have seen that. So markets have made a new high, but it was very volatile last week, and it hit the peak and it's heated up. And the thing of worry is that Banknifty has lost the momentum slightly, although the trend is intact on both. And it may continue to be volatile until the budget that may come in the next week. And after that, depending on the outcome, markets may turn very volatile. Big moves can be expected either upside or downside, depending on the outcome, how market digests the outcome of the budget. So that's the summary, and on demands we already seen that it is expanding, and in context with the Nifty that's consolidating. If you look at the support resistance levels, the first major resistance now it's going to be all-time high levels at 24,600 nearby zones, and after that 24,700, 800, 925,000 eventually, uncharted territory. So that's where the resistance could happen, while the supports could come in at 24,000 first to begin with, because the rounding number. If in case the 24,500 support is rounding number support is breached, and if the 24,000 is also breached, it's 20 exponential moving average, then it would find the next support at 50 exponential moving average at 23,400, and then 100 exponential comes in at 22,800. Before that, 23,000 is the major support that's going to be. In between the moving averages, we have the Fibonacci extensions and the Fibonacci retracement levels marked here. That could also come in as intermittent supports. Moving to the Banknifty, the first major resistance would be 53,357, which is all-time high. Before that, we have to clear the 53,000. So 53,000 is the first major resistance. That's where the 61.8 Fibonacci extension is also coming. So 53,000 has to be clearly conquered once again by the Banknifty before it takes out the all-time high at 53,350, and then 54,000 will be the next resistance. And downside, previous week, Thursday exactly, it breached the 20 exponential moving average at 50, and then bounced up. So that low is going to be very crucial. That's coming somewhere at near to the 51,923. The first support for the Banknifty will be 52,000, which it just managed to close above last week. And if that is breached, then 51,923 to the exponential moving average the support. Will it close by the 50 Fibonacci extension support also that's coming. So that is breached, it falls down to 50,000, 51,000, big rounding number, and then 50,561, where the 50 exponential moving average is there. That is also breached, then it goes to 50,000 big rounding number, and then 49,220 for the 100 exponential moving average is coming. So it can clearly see that there is a retracement, small, up to 3% of retracement has happened, and a quick reversal also happened, but it did not sustain that on Friday. Is the difference between the Nifty and the Banknifty. So the levels can clearly be made out from that and take positions accordingly. Moving ahead, if you try to understand the momentum and the trend using the RSI indicator for the momentum and the ADX for the trend on multi-time frames on weekly and monthly on both the indices, you can study it like the left side. You have the weeklies. So weekly momentum is intact, although it has dipped a little bit on the Banknifty. Momentum is rising up in both zones and slightly falling on the Banknifty. Momentum on the weekly medium term. So the daily charts, you can see that the momentum has slipped in the sideways flattish is what you see on the Banknifty, but Nifty, it's rising up. So momentum is fine, except that Banknifty is in the short term is slightly slipped. Okay. Trend indicators, RSI, if you see, it is intact as it is. It's in the bull zones on both the indices and both time frames. Right? Exactly as it is. The trend is intact. On the Nifty is slightly slipped. That's all has happened. The moving to see the volatility, in addition to the Bollinger Bands, we can study it from the India wicks, which just spiked up once again after a equivalent fall that happened last week, 8%, and now still it's in 30.73 low voltage regime. Remember, we had a big spikes that came in the major event of the elections. A similar, or at least half of that kind of big moves can happen in the budget outcomes as well. That volatility to the realized volatility, the difference spread is not much in favor, it's too much, 144. So option sellers may not be benefiting that much at this kind of level. There's a risk associated, it's positive, but ideally it should be 50% the spread difference. And the volatility is also still high, but not too high, 64. So overall, option selling does not favor too much when the market is moving like this. Open interest data on the futures is showing it's a long build-up, and Banknifty contrary it is showing long unwinding, it is bearish in nature. So that contradiction can be seen for the July 16th. Banknifty, it's a truncated week, so when it's a Tuesday expiry on the Banknifty and July 18th Thursday expiry on the Nifty. So BCR for that is also contradicting, 1.05 bullish for the Nifty and bearish 0.78 on the Banknifty. So there is a contradiction in open interest, just like how the charts is showing. Open interest also is diverging. One is bullish, one is bearish. Keep that in mind. So the options data is showing support resistance levels. A wider range of support resistance is what you see for the next week. 24,000 and 25,000, 1,000 point, anything can happen between that. So that's where the highest put and call writing is seen. Second highest put and call writing is at 24,400 and 24,500. That's a narrow range, but the highest support resistance has a very wide range. Nifty has a comparatively lesser range. 52,000 and 53,000 is where the highest put and call writing is seen on the Banknifty. Second highest is at 51,000 and 52,500, narrow range. So that's where the levels, you can clearly see that. Over here we try to understand this, the sectoral indices basically. So some hitback has happened in some of the sectors, where metal went down further to 0.65, auto also went down, right? Realty also went down. So the only sectors that are remaining are defensive sectors. The IT sectors moved drastically up 3.4%, FMCG has moved 3.5%, Pharma also has moved nearly 1%, so 7.5%. So three sectors that were bullish bets on the long side can be taken. IT sector, Pharma sector, and FMCG. Metal, auto, and realty are hit, and it's heated up and it's slightly raising. You can see the same in these charts in the different sectoral indices. It is breaking out, cup and handle breakout. It is once again coming to resistance zone, but breakout from there could be very great. So it's bullish momentum in the trend, and metal sector is facing the resistance at the top of the trendline channel. You can see that, but momentum is bullish in the trend in the medium term. Auto sector also at resistance at the top of the trendline channel, but momentum in the medium term is bullish. Pharma is breaking out, and momentum is breaking out from the flat pattern, and momentum and the trend is absolutely bullish. FMCG also breaking out and moving after the consolidation. It's moving, there's a lot of space towards the top of the trendline channel. While reality is heated up and it's at the top and it's retracing, showing consolidation and some heat up, but momentum is back to the medium term. That's how it is. Let's now study the heavyweight stocks that contribute maximum to the index. Beginning with HDFC Bank, that was a big disappointment after it made a new all-time high and then retraced. Heavy selling, profit booking has happened, and momentum is just managing to hang on the bull zones, while the trend also remains there on the medium term. But that's a big red candle that you have seen for the last 2 weeks. Big reversal from the top after making the all-time high. So you have to keep a close watch on if it's able to sustain that momentum, and then would it find a base at the RSI 60 and momentum and then bounce up from there or not, right? So all eyes will be on if it is able to move above this week's candle high and the previous week's candle high, right? If that does not happen, it can go back to find support at the trend line zone at 1,500 before it once again attempts to break. So that's multiple times resistance zone. Disappointing move from the HDFC once again, following the results outcome previous week. The lines is absolutely bullish. Wide range bullish candle can be seen. Momentum is rising up, trend is rising up, and a lot of space before it touches the all-time top of the trend line channel. So at the all-time high levels, lines is what is moving the market right now. ICICI Bank also bullish candle, good volumes, momentum, trend, everything bullish. But keep in mind that it's once again at the top of the trend line channel. So there could be some resistance that could come in, but otherwise bullish. So Lions, ICICI Bank absolutely bullish. HDFC trying to hang on at the bull zones. What made the market last week was the Infosys and the TCS, which is breaking out with wide bullish candles and momentum rising into the bull zones, and trend also rising into the bull zones. Correct, Mahindra is consolidating as usual, big volumes. Of course, that's happening, but it's a contra bet, and it keeps on consolidating like this forever. ITC did a breakout, which could move further another 20-30 points more. It's a flat breakout, clearly seen. Momentum trend absolutely bullish. Trend, right? So IDC, Reliance, ICICI Bank absolutely bullish, and HDFC also trying to hang on there, and full support from the IT sectors that's breaking out. So that's what's moving the market. Total markets, mid cap and the small cap both is showing some red color, some resistance at the all-time highs, but that does not stop it from retracing a bit. So momentum absolutely remains there, but you have to be cautious. Institutional participation. Once again, Fyers for the second or third week. For the third week, probably they turned out to be buyers. Some inflation cooled down data, and the 3,800,000 crores of buying. It's only one day that they sold on Tuesday. Otherwise, it was all buying, small buying, but nearly 4,000 crores of buying has happened for the Fyers after a long time, since last 2 weeks. Yes, are also buying last week. They were sellers, but this week they were also seen buying big time. That's what market retail money is flowing in mutual funds. And that's what is 8,500 crores all about. And longs has fallen down on the derivatives for the Fyers AI side last week. You can see that there is bullish on the Fyers on the futures, index futures, while there are interest on the options. So while the retailers are bearish on the futures, the Fyers are, this data is on Friday. Here, if you try to understand the global markets, the currencies and global commodities, gold, oil, etc. Let's begin with the currencies. The dollar has closed red, 0.75% down. So 104. Gold falling down, dollar falling down, and sideways falling is good for an emerging market like ours. But currency has not appreciated. It is flattish. Actually, it is green, so it remains at 83.49. You can clearly see that it's at a wedge resistance zone and remaining there since very long time. When as the central banks keeps on maintaining that, managing that levels. Nothing is happening, but it remains weak as before. Although the dollar has cooled off slightly. Crude oil, as you can see, it is seeing some resistance at the top of the trend line channel, but yeah, momentum also is the resistance and falling down. Good for oil imported country like ours. But if it breakout from here happens, then it can be dangerous. But as of now, things seems to be okay with respect to the crude oil. Gold is once again trying to make a new all-time high. It has been consolidating in a flag pattern's head, flag part, and looks like gold is rising. When the market is at the top, gold is also rising, means you have to be cautious. It could be indication that the money is shifting to safer assets now. So gold is a hedging instrument. It's good that it's making new highs and heading towards another all-time high. Once again, momentum is full zones, rising up. So gold is rising, oil is at resistance falling slightly, and dollar is cooling off. Rupee remains weak. What else? You have the US market. Some other market is also greenish, except that Nasdaq is slightly close flat. 0.5%, less than 0.5% down. The Nasdaq, you can see that it has happened after hitting the all-time high. Probably that is a flop thinking. But Dow Jones is solid green candle, made all-time highs. S&P 500 also made all-time highs, and then some green candles. Momentum and trend absolutely bullish on all. So US markets are green, which is positive because US market is a mother market. It could have its impacts on our markets as well. Now that we have done all this analysis, let's have two stock picks for next week. One is Wipro. IT sector is breaking out. Cup and handle breakout. Wipro also is having a cup and handle. Breakout is confirmed. Solid candles. Bullish momentum. Bullish trend. Good risk reward. Good volumes. Absolutely. Wipro. ITC flag breakout confirmation. We could go another 30 points at least. Good risk reward. 1:2 trade can be attempted. Tight stop losses. Reason is trend is good, volume is good, momentum is also good. Pattern is a flag breakout confirmation. Actionable, a very simple bear call spread for next week with 24,700 call sold and 24,900 higher call bought. Get out as soon as the levels are breached, 24,730. The assumption, the view for the market, view for the risk we're taking is that there could be some resistance that may come in before it keeps the 25,000 the next week. If that view changes, gets negated, then you get out with the loss, happy loss, right? Otherwise, you could have a small profit. Risk reward is not that great. POP is good and range is best. Not a great trade, but yeah, get out the tight stop losses. Don't wait for the last day. Right? It's a bigger call spread for the next week on the Nifty. Let's just try to wrap it up. So market in short has gone very volatile. If you look at each day candlesticks, you can see that it's went volatile. But in between, Nifty made an all-time high. Banknifty showed some weakness. It retraced a little bit. It could not sustain the recovery, the V-shaped recovery that happened on Friday. But regardless, market has done a beautiful rally of 38 to 46% respectively, and then 20 exponential moving average still intact. Market is heated up. Keep that in mind. So let's try to put in separate buckets for the bulls and the bears. So formula is bullish and trend is also bullish, except momentum is slightly sideways in the case of Banknifty. So 20 exponential moving average is maintained. India VIX is still low. Expansion on the upside is seen on the Nifty. Sectoral indices are doing good. They have multiple stocks, heavyweight stocks that are always, most of them are bullish or sideways, none of them are in bear zones. Mid cap, small cap is lower, market is still at the all-time high levels, maintaining that sustain there. Fyers seems to be buying more in the last 2-3 weeks. This market is in the green. Now futures are built up is seen in the Nifty, and the PCR is also bullish on the options of Nifty for the next week. Now what is in favor of the bears is the fact that Banknifty is showing some trouble, slightly slipping off momentum. Sideways contraction is on the Bollinger Bands. The open interest is long and winding. It is bearish in nature on the futures OI, and PCR also on the options OI is bearish. The Fibonacci extends 61.8% is hit already, and then it's time for some retracement is due. And so the top of the trend line challenge could happen anytime. And we'll have the busy volatility next week before the budget that comes the next week. So I'll be cautious about the fact. The market is heated up. It's at the very high. There is a stellar rally. Retracements are healthy. It will come in any time when it least expected. Right. So I'll be cautious slightly. Right. Technically, I have the view of mild bearishness now. Now that it is bullish, definitely charts are saying, but now that it's heated up and although we have the VIX that's pulling momentum gaining and all that, it's heated up. That's why I have this mild bearish. Mild. I may be wrong, but last week also I went wrong with this Nifty, but I continue to have my mild bearish for the next week also. Now the technical analysis go for a toss if there is black swan events that coming out of the interest rate hikes or wars or COVID or inflation or this and that. All the events can screw up everything, so you have to be cautious. Therefore, you should have always portfolio level hedges and portion level hedges mandatorily. Right? You can also use the options for making passive income like rental income by using option strategy. Check out the playlist for that. Basically, next week I see 23,500 and 25,000 for the Nifty and 15,000 and 53,500 as a range for the Banknifty. So as long as this 23,000 is maintained somehow and 50,000 is also made change, then we may see a consolidation and then eventually it may break out for the next leg. But if that is breached, then we may have to rethink once again. So you have to be cautious slightly. Market is heated up at the very all-time high, absolute bullish charts, but time for some caution because retracements makes the market healthy and that will come when you least expected. So careful. That's all I have. I also have my presence in the different social media channels, especially the Twitter or the X, so you can subscribe there to get everyday updates on charts and analysis and all that. And if you like this content, subscribe and like and share. That's all I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.